Welcome back to our channel. Today we are diving deep into Canada's real estate market. When talking about the real estate market in Canada, the first cities that come to mind are Toronto, Vancouver, Montreal, Ottawa, and Calgary. Let's see why we are talking about the major cities in Canada and what I expect to happen to the Canadian real estate market in this summer. Let's get into this. Remember a few months ago when the Bank of Canada hinted at possible rate cuts this year? Experts were eyeing June and July. I was at a meeting in February a couple months ago where Benjamin Tal discussed potential rate cuts in the summer. If you don't know who Benjamin Tal is, he's the chief economist at CIBC. Now with April upon us, let's explore what this could mean for a real estate market. I'll tell you my thoughts on this topic and the reasoning behind it further in this video. Alright, let's get back to the major cities in Canada and pick one as an example to see what's the general trend. Since I've been working in Toronto real estate market for over a decade and I was working in real estate developments before that, I can confidently say that Toronto is the best example when it comes to real estate market trends. Of course, no offense to Van City real estate. The Canadian real estate macro trends start from the major cities and it goes to suburbs and moves to further parts of Canada like a wave. So basically the trend that starts in major cities ripples outward. It's always been like this. Focusing on the heart of Canadian real estate market, let's talk about Toronto. Then I will show you the charts and economic indicators that in the past few years have helped me predict the future. April 2024 started with these numbers in Toronto real estate market. Average price of a home in Toronto climbed up to $1,121,000, which is 1.3% up year over year, whereas sales were down by 4.5%. If you look at the charts, you can see that the average price had a climb of 9.2% since January, which in fact is a big jump in just 3 months. If you would like to view the charts on your own, you can go to our website yourrealestateagent.com and from the top menu select the market, and there you can see the charts on the Toronto real estate market. As you can see, the month of inventory has been dropping since October 2023, and in Toronto we have a month of inventory slightly less than 2 months of inventory, which is approximately 1.9 months of inventory. That tells us we've entered a seller's market zone. This doesn't mean the market is gonna skyrocket though, and it can't say there's gonna be a crash coming either. Both these scenarios depend on many factors, which I'm gonna explain to you a little bit further in this video. So now, based on these charts, it looks like the local bottom was formed in January 2024 with an average price of $1,026,000. January 2023 also the trend was similar. It looked like the bottom was in with the average price of $1,038,000, and then we saw a rapid price acceleration till May 2023. People who were on the sidelines rushed back to the market and the inventory dried up. So on June, we saw a new decision from Bank of Canada. If you remember, on June 7th, 2023, the Bank of Canada announced that they will increase the interest rates again. They increased it by 25 basis points or 0.25%. That cooled down the market for a little bit. A month later, in 12th of July 2023, Bank of Canada announced another rate increase of 25 basis points, which brought the overnight lending rate to 5%. This is their exact wording. Global inflation is easy with lower energy prices and a decline in goods price inflation. However, robust demand and tight labor markets are causing persistent inflationary pressure in services. Canada's economy, first of all, I'm not going to read the whole thing. I'm going to read the important parts for you. Canada's economy has been stronger than expected with more momentum in demand. Again, I'll skip the reading to save you time and keep this video short. So I'm going to jump to the last part that was interesting to me. It was like this: newcomers are helping to ease the shortage of workers while also boosting consumer spending and adding to demand for housing. I'm gonna put the link down into the description so you can read that on your own. So as you can see, they were closely watching the real estate market in major cities, mainly Toronto. No offense to Van City or Montreal, cause as you know, the real estate market had a crazy 15.2% jump in just 4 months from January 2023 till May 2023. That translates into almost 4% inflation in home sale prices in Toronto every single month. Let that sink in, every single month. So they were watching the Toronto real estate market and other areas, of course, closely. That's another reason why I chose Toronto market to predict this summer. Now let's get back to our prediction. When I used to work in developments, part of our job was to predict the demand for housing in the future. In preparing the planning and feasibility studies. For that, you need to be aware of the job market, population growth, income, and overall the economy. So in order to be able to have a more clear idea of what the future holds, you need to get yourself familiar with economics. Or also you can simply subscribe to my YouTube channel. If you haven't done so, please hit the like button, subscribe to my YouTube channel, and click the notification button as well. Now let's talk about what can happen to the Canadian real estate market this summer. First of all, I can tell you, till we don't get a signal of any rate cuts, I don't expect to see real estate prices skyrocketing like before. So if you're following this video so that I tell you we are going to the moon or we are crashing, you better stop watching. This is not one of those cheesy videos. We are talking about the real hard truth here. As you read in the Bank of Canada's briefings, other than the core inflation and CPI, which I have my own opinion on, what is important for the policymakers are real estate demand and the job market. And by real estate demand, I mean real estate price inflation. At this point, I personally won't pay too much attention to the core inflation and CPI. Not because they are not important, but if you are familiar with economics, you know that we normally see two sets of indicators, nominal and real or actual. So the nominal CPI can be one thing, but the actual CPI can be different. That's why I will save the time and will not go through them. So let's talk about Toronto. We just saw the supply and demand ratio and price growth in real estate market. So we know that the real estate market is relatively stable. So the next indicator, important indicator in my opinion, that will make or break the rate decision will be the job market. I'll look out for the unemployment rate and the job market report. I think the answer is in that report. If we have a strong job market by the summer, I don't see rates coming down because the real estate market is looking stable. So that's another reason for Bank of Canada to hold the overnight lending rate at 5%. Look at these charts on TradingView. This is the unemployment rate. With the current stable real estate market, in my opinion, we shouldn't expect a rate cut unless the unemployment rate goes above 6.5 or somewhere around there. That's my prediction of the time that we could see the rate cuts. Let me know what you think in the comments and tell us if you're more optimistic on this or not. If you watched my previous videos, you know I predicted that Toronto average home prices would fluctuate around $1.1 million, and that's the price we are gonna see for a while, with maybe 5 to maximum 10% fluctuations until the actual cuts come in place. Alright, to wrap up this video, I will send another video with my predictions very soon, and until then, don't forget to like this video, share it with your friends, and subscribe to my channels. Stay informed and happy investing.